Okay, we are looking at DraftKings. So I like the level. Look left, hard bounce from this level. So the time to panic out of it is not now. Technically, you could say this is a zone. Like I have a little thingy here saying these are old comments. The letter S denotes support. It worked back then, and we're in it now. This is a target area from the breakdown that I had drawn earlier. We're talking like last year, summer. So this is a target zone from the summer, and it came to fruition, and here we are in it again. Not a place to panic, especially that this was the bottom in 2023 as well. So not a floor, but a hard bounce. Tradable bounce is the term. And I would exit as it approaches 37 from a trading perspective. If I wanted to buy a little bit for an investment, it wouldn't be too bad to nibble. Why wouldn't I go all in? Because I can totally justify the low 20s as well. Okay? How will that happen? Same as it happens with the market. If we get a tradable bounce and it fails and we lose the lows that we just breached, we will take another leg lower. In this case, we will be in the 25s or lower. So good start, good exit on the short. If you were bearish, I know a few people that were. A good tradable bounce, yes, level. A starting of an investment, yes. Look at it shorter term. You know, it doesn't look as happy when you look at, where's the bounce? You have to go back, which doesn't make it very effective, but it's there. So they are selling rallies. Where will they stop? Okay. Zoom out. Okay, this one lost the tradable bounce and it's trying to recover it. So I would say approaching 710, it would be a place I would exit. Approaching 760, I would be out completely out of this. Unless I'm buying an investment, then I don't think there's anything to do. Let me see. Oof. What is this? Yeah, be careful. Be careful. Just do your homework on the company fundamentals from an investment perspective. The trading comments I already told you. Who is this? Duke Energy. Wouldn't touch this. So is this one of those theories where nuclear energy? Is this the one? Is this one of those nuclear energy in the future? It's a nat gas company. But why is it up here? That's pretty scary. Kudos that you're up there. But this chart needs a drop towards 106 or 108 in the next few weeks, maybe a couple months. So if you're an investor, you should be ready for a drop. If you're looking to invest, you should take a small position to start just in case the drop happens. It's great that it's holding up there in spite of market conditions. So just know that it's vulnerable. How about that? No. I wouldn't short it because I don't know anything about it. So Berkshire, I know what it is. It was shortable. With this one, I don't know what they're rallying on. So I would not short it, but I would just be aware that it is vulnerable at these levels. Dexcom. Okay, so all I know is that the investors in Dexcom are inconsistent. So I put arrows, price to sales, price to sales, price to sales. It's cheap from a price to sales basis. It could bounce, but it could bounce from here or from 44. So there is support right here and 44. So if I'm long with shares, I'm not adding. If I'm looking to get long, I'm only taking a starting position because it could go to 44. And I think it would trigger a buy at 44. So sell a put around 44 or a put spread, you'd be jumping the gun. If it gets down there, you'd be long at 44-ish. That would be a nice trade. Investment-wise, there's no need to add. You can nibble. Emerson Electric, tradable area from here to 85. You can look left, well consolidated on a weekly basis. Let's look at the daily basis. Free fall. The fact that they lost 100 is not encouraging, but you do have a bunch of buyers through 85, 88, 86. You can see them. So no panic. Let's go lower. Yeah, the rallies are going to be met by sellers, so be careful. And if you look left, you can't find the support for a long time, so it's not very effective, as I said before. I would personally Would never invest in a company that has a P&L that is this. So who is the best investor of all time? Warren Buffett. He would never touch a company that has a P&L like this. If this P&L is accurate by TradingView, there's no way I would touch this. Sales that go to 13.5 billion and then to 4 billion within 2 years, and quarters that are this erratic, not for me. That's from an investing perspective. Trading wise, there's no support. This is just a junky rise. They're buying dips on the way up. They're probably going to be selling rips on the way down. We'll see. Rallies into 50, I would take advantage of that. If by some miracle you go above 55, okay, maybe you go to 60. So I don't understand this company. Please do your homework on it. 45 is important. Below that, 42 is important. Energy transfer, is that who this is? Yes. Let's go up in time. Okay, fallen into the base of stupidity. This, stupid. This, I don't care what they said. If there's no money inside the P&L that shows this is stupid. Whoever chased it up there, they got suckered into chasing a ghost. Once they lost 18, this is the target. So that's the good news. You're back to base. You fulfill the target from 18. Now let's see how well they can stop the bleeding. Between here and 15 should be an unbelievable buyer. And then if not, then it's at 14-ish. So if I'm long, I'm not adding. If I wanted to nibble long because I liked it and I've been watching and I've been waiting, then fine. Flex. It's beyond me. I say it and I complain every time. Flat P&L, stock price that goes through the roof. Someone explain that to me, please. This one is still vulnerable to 22, 23. You do have a support zone that was tradable bounce, but then before that you have weak. There's no volume back here. So I would use the rally to exit, and it could rally to 31. So if I got long on Friday, good job, I would exit. I would trade it. I don't think the rally back is going to be easy, and I think they might continue to sell rallies to get down, to explore better entry points. Like, what the heck is this? So Mark 29, whatever this is. Here, I don't track the stock. I don't know if you're going to ask me about it again, but this is an area that you should pay attention to, and another one up here. Okay, FLG, Flagstar Financial. If this is a bank earnings are starting soon, so now you're suspect to headlines. Banks are fine. They should not be leading the market. What the heck is going on here? What happened? Why is it cut in half? Down to 1/3. Yeah, I don't know what this is. Very careful. Technically speaking, you do have a bunch of support, so but just don't lose 8.5. Ford. Somebody said I got a signed Ford. Well, if I got a signed Ford, I'd be out up here. Wow, what happened to Ford last week? Wait, that cannot be. That's not Ford. You want Ford as in like Ford this one, or Ford like Ford Motor? Who are you in here? The person that asked for it? Okay, so let's go with Ford Motor. Ford Motors. I'm not a fan of car companies, let alone Ford. I think the management there did not prove itself worthy of my money. They have some of the best fans on the planet, and they treat them by desecrating their emblem and introducing an EV and calling it a Mustang. That pisses off people. Anyway, I don't know if you can call a bottom in this stock. So it will go with the market. It might fall to 8.5, 8.8. It would make a good long-term investment for somebody who's patient. Why? Because you found people to buy it at 26 not too long ago. And somebody said, look, Ford, it broke into a new all-time high. I said, no, it didn't. You should zoom out. And that person says, oh my gosh, I didn't realize it. Yes. So when it was up here, they were trying to convince me that this was an all-time high, and it isn't. So it swings wildly. And The business it generates a lot of cash. They tell me that there's a Carmageddon going on where car sales are falling off a cliff. I've seen a few posts about used car dealers saying they're going to jack up the prices of cars. They're not selling their cars because of the tariffs. Get away from that dealer. That's a cheat. The math doesn't math the way they're saying it. They don't understand how tariffs work. Okay? We have plenty of cars. Like if it was, we're talking bread, then okay, maybe I believe it. But it's cars. We have plenty of cars. And the fact that the dealer says they're going to jack up their used car prices, their used car sales are going to fall off a cliff. And guess what they'll do again? They'll drop their prices. Because if indeed we have a recession coming, people are not scammering to buy cars and outbid each other on cars. If you say you're not going to sell me this car because you want over retail, I'll say keep it. I'll go lease a brand new car for a lot cheaper. I understand the business. I don't think they do. Okay. So rallies into 10 and 1050 are reasons to exit. That purple box should present some sellers. You do have support below here and below here. So if we lose this support zone, like it closed okay, we have backup support. So if I'm an investor in Ford stock and I got assigned shares, I'm not panicking. What I can do, I think the question was, can I sell puts and whatever? No, you sell puts to buy more shares. You buy puts to protect your shares, or you sell covered calls to put your shares to work. So don't do anything until you learn those concepts. I believe the person that asked me, I'm talking to you, you need to look into how it is that I can sell covered calls against the shares I own. And before you do that, make sure you understand it, really understand it. Selling covered calls. So if I own shares and I paid $9 for them and I have 100 shares, I can promise someone that I would sell them my shares at 11, and that would mean I can sell a call against the shares that I own. So I own them and I sell a call. They give me money, but now I'm committed to giving them my shares at 11 at any point in time. FUTU. Nice breakout area that it's falling into. Still vulnerable to come down to 67, but that's fine. Huge fail, huge breakout, huge confirmation back into the confirmed bounce level. To be honest, I don't know what. They doubled the price in 4, 5, 7, 8 days. Really? And then they cut it in half, and then they double it again, and then they cut it in half. Do you really want to invest with these fools? No. The P&L is amazing, and this is manipulation taking your money away. You're either an investor from super low prices, or you're an active trader that knows what they're doing. Either way, it's got support scattered from here on to 60. Next time it goes to 60, it might be a bargain if the metrics are correct. Price to sales might be a good metric, although PE should be too, because look at how profitable this is. What the hell does it do? Wow. This is an unbelievable P&L. Is it based in the US? Because if it's not, no, it isn't. Just be careful. How real is this? Is this audited information? Anyway, whoops, GDX. We're short GDX, and I booked half of my short. It was free money, literally. We sold calls to buy puts. That's the spirit. Sold call spreads to buy put spreads. So the put spread we bought were completely financed by the calls we sold. So you can't calculate a percentage return. It's like in the thousands, really. The cost basis should be zero for that trade. So I scalped a, quote, 30% win, but it isn't. It's more. So why did I close it? It can still continue to fall towards 39, or maybe if it carries forward, it's 36, maybe 35. So Nick, why did you close? Because it was a trade and I made money. I don't need to make all the money. And it's falling into a support zone, previously well-consolidated zone. And gold and the market sold off 13% in 2 days, so they might have a snapback rally. And these are stocks. They're not gold. They're gold stocks, companies, not GLD. A snapback rally, I could rebuy the same short. 44 should present a lot of sellers. So if it bounces to 44, you should consider, if you're long against me, to exit, because this might happen. Okay. This is a potential path. Next, it does have support here. And if we lose 38.50, you might end up at 35, and that will be target 2 of my trade. Okay, so there is a bounce coming maybe, and if it does, I would exit longs. GE Health. Where are my friends? Where are my GE friends? No comment. Although I don't have anything against GE Health, I don't know much about it, but the regular GE I do. This seems like a good entry point, although the only problem is we don't have a lot of history with this stock, right? It's a spin-off of GE. Not a bad place to explore a few shares. Okay, so I'm going to put it on my to-do list just because I honestly don't know the P&L. So I need to do some homework. If anybody has any insight on the business, not what everybody says about the business. I don't want recommendation from other traders. I want business experts' opinion. Send it to me. I would love to do homework on that. Other than that, the chart says it's never been lower than this low, but that's pretty new. So we'll see how that plays out. Speaking of gold, GLD. I do have a short that I sent out on gold, and it was under pressure, and it's no longer under pressure. So what I would do is, if I was short a stock and it gives me relief, then I would use that relief drop in order to fix my problem. I don't just sit there and hope it continues to work my way, although I think it will. I should be safe. So if I put 10 credit call spreads in action, I might want to cut them in half just in case they revert higher. I think gold is overbought. Gold should be $1 million, as they say. If it's not zero, it should be $1 million, just like Bitcoin, because it's rare and people love it, and we're not going to stop loving it. So demand is strong and supply is shrinking in theory. So it should always go up in price. Buy the dip mode, right? But don't chase the rip. Base is 272 to 268, the base for this rally. So again here, just like GDX, I think rallies into 284 should be sold. So if this jumps to here and then here, it might do this. It's vulnerable. Like this. Broadening wedge broke down, and this is the target of the broadening wedge. These two yellow lines I drew live in the live room. I remember somebody asked me. Like here, it didn't play out. So that's why I said here it looked like it was going to do what I'm saying it might do here. So if somebody said, okay, I was short, I would have said I would lighten up just in case they snap back rally. So lighten up just in case they snap back rally. So fix this one is what I'm saying, the credit call spread. This one you can turn into a credit put spread to defend it. Anyway, so come into the live room. I'll help you manage this much better. Levels to pay attention to 282 and 284. And it's shortable again at 286. Google, look at this. It hit my targets, those blue lines. Evil company. Evil because they said they do no evil and they keep doing evil. They raise their prices at the very worst possible times. So I'm all involved in their ecosystem and I hate it. I hate the fact that I am. Their ecosystem is pretty good. They have excellent assets, excellent balance sheet, excellent income stream, good solid management, harsh business people. Rallies into 168 should find a lot of sellers. Rallies into 176 are shortable. Actually 178. Good consolidation zone below, but it's scattered down to 132 or 138. So this is the kind of stock I would comfortably sell puts to own shares out in time and not even blink twice about it. I believe we did it before. It gave us 50% of the profits right away, but now the profits are gone and it's back to evenish. I didn't check on it. I think we sold puts to own shares way below current price. Going from memory, somewhere around $100. So I would repeat that trade. Like if I missed it the first time around, it's probably even more fruitful. So I will put that on my to-do list. Again, if I'm not, okay, it is already. So can you believe it that somebody will pay you hundreds of dollars to buy their shares down at 100? That's what the case is. That's how panicked people are. So I don't want to be selling puts left and right when the market is at all-time highs. But when we're crashing, that's when I start nibbling. I don't load up because we don't know. We might have zombies in the street and we might be down 40, 50%. I don't know. So we'll see how that plays out. Grab. Back to base. They should have support from here on down. Since it's a sub $5 stock, I don't trade it for myself. Options become useless. Under $5, I mean, the stock itself is an option. So why would you use options? 350 looks like a price. 340, and whatever that low is, 291. Don't lose that. HIMS, great business. I have a credit put spread in it. I haven't looked at it because when I said I'm selling a credit put spread at 23, I said I really want to buy the shares at 23. So if I wake up one day and I own shares at 23, I would sell my protective put and my break-even point would be around $20. And I think it's not a bad deal to be long HIMS as an investment at $20 with this P&L. The only way that this stock would scare me is if it comes out that they're actually not following rules. Like, I'm pretty sure they're pretty loosey-goosey with their prescriptions, just so they can get the business out the door, I should say. So if I'm long already, I do not add, because there's a scenario of sub $18. Okay? A long shot, but it's there. Boy, HNHPF, Han High. I wouldn't touch it. Yes, there's a bounce coming. Yes, there's a descending wedge that could snap back rally. But what is this? There's no volume down here, so there's no prior price discovery in this zone. Yeah, so there is a support, but it's between here and 6.6. So I don't know where it is. If I was a trader, I would use bounces to exit. It's in free fall. Hood. Very weird company. They want to get into betting now. Did I hear that correct? Again, what the hell is this? This earnings? No, not for me. I used to own shares, made some money on it, but it was by mistake that I owned shares. I sold a put and I forgot about it and I got assigned shares. The best base is around 25 from a charts perspective. So I'll say it this way. Technically, this ticker, regardless of what it is, if they don't get back above 40, they're probably susceptible to 25 and 22, maybe 20. But that would require the market to continue falling. I think it doesn't do it alone. This base is not good for support. It's just wishy-washy. So you might get rallies into 40. I think I would exit those rallies if I was a trader. If I'm an investor and I started longs here, hopefully it's a partial position to add much lower. Hershey's. Who doesn't like a bar Hershey's? Middle of the range. You have a bunch of buyers below, a bunch of sellers above. I remember the selling here was ferocious. So whoever owns it from here should not have weak hands. So if I own the stock, I'm comfortable. If I'm selling a put, I'm comfortable. Because this was panic selling on something and was rejected, and now they're still holding well in a pretty bad market. So I think if I'm an investor in Hershey's, I did well owning it here. I don't know if it pays a dividend or how much upside it has over time, but as a stock, I wouldn't mind holding it long here. Humana. Same. This is a weekly chart. This weekly chart says it could go to 340. So that's a lot of upside. Do I pile into it now? No, it's a weekly chart. So let's zoom in on the daily chart. Yep, bunch of support. So as long as it's holding these supports, which extend through 210, the upside can happen. You would have a burst higher once you breach 310. You have struggles at 280, 285. So 290 is not going to be easy, but 310 will give you a lot of relief. Short term, bunch of buyers below, so you can hold it while this opportunity develops with relative confidence. Now, just as hard as the buyer is at 244, the seller is at 278. Nick, you're changing these numbers. Well, I'm changing time frames for a different perspective, giving you different speed comments. So like I can see it going to 265, 66. So holding it is okay. Intel, I wouldn't mind investing in it for the long term as a speculative rebound. This is a beast. Management effed it up big time. How bad can it get? It can get to 15 or 12. So if I wanted an investment for the future on a comeback story, this might be it. Let's say I wanted to put $2,000 in it for the long term out of a big portfolio. I would buy $1,000 worth of shares right now and sit on it. If it goes down to 13 or 12, I will add the second 1,000 and then forget about it. I think that that's what these guys wanted with this one, so we'll skip it. I'm going to skip the IWM as well because I do a special video for that. I will do the IWM and all of them, the indices together in a 6-minute video. So JD, everything I said about BABA applies here. I don't trade these Chinese stocks because I'm at a disadvantage. Technically speaking, you have buyers through 32, 33. Technically speaking, you can bounce to 39 or 40. I would use that bounce to exit. You're going to hit some resistance up there. Okay, so sell the rally mode for me here. Coca-Cola. Okie dokie. Who's smiling? Okay, so we shorted Coca-Cola with conviction a couple of times this last year. This was one. This was the second. And if you were actively trading it with me in the live room, you know what I'm talking about. It's been a pretty good trade. So here's my thought. There is a scenario that puts it in the low 60s, if not lower. So do I close my position? I closed all of my position, but I left runners in place. They're up, I don't know, 120, 150%. So I am still short Coca-Cola by owned puts, but the puts have been paid for by all the other puts I've already booked. So this is like a free setup. And I like the company. I just hate the price action. If you didn't notice, Coca-Cola broke all-time high or close to it when the market was down 6%. On what planet does that make sense? Right? Just think about it logically. Oh, you got to hide in the staples. That was what Jim Cramer was saying. Are you freaking kidding me with this comment? It was a no-brainer short because if the markets rally, the money will unhide from Coca-Cola. So Coca-Cola will be reverse market as well on the way up. But if the market continues to fall, my theory was that even Coca-Cola will fall. And you saw what happened to it on Friday, down 4%. So anyway, I would not be long Coca-Cola for any logic whatsoever. Good company, just not an obvious entry point. I am short. Kohl's, I don't want to invest in Kohl's because the company itself wouldn't want to own itself either. I think they're looking for strategic alternatives, which is code for, we don't know what to do with our business. Hopefully somebody will buy us out. I don't know what to say here. What are you asking me? Invest in it? Hell no, not for any reason whatsoever. Buying the dip? Well, why? These levels are from 1995 or 96. You can even say they're from 1992 almost, 94. So I don't think I can help you with that. I can tell you short term, sellers at 8, sellers at 760. Okay. LAZR, Luminar. So this might be self-driving technology on LiDAR, maybe. Sounds like it. Yep, LiDAR. Long-range LiDAR. So no income to speak of, bunch of spending, that's fine. Technically, this little candle here better hold because they made a new low below 4.48 and now the line is 4.2. You lose 4.2, you're going to 3.6. Meanwhile, they're selling rallies. This is a story where you buy the stock and you forget about it. In the future, if its business explodes, then somebody buys it out or something. I don't think it's a good trading stock. It's a good investment if you know the business. I'm not saying it's a good investment like you should go buy and buy it. It makes a better investment idea than a trading idea. It's not for me. I wouldn't do this. LULU. Let's see how far it's fallen. Not far enough. So great stock to trade. Pretty difficult options trading. It has a hard bounce where we're at. If we lose it, we can go to 200 or 180. So look left. The pandemic width is your base, but look how wide it is. So we're in the base of the pandemic. That's a significant level. It's a place where you can go long for a bounce if you're a trader, or start an investment if you're an investor. Start an investment. I wouldn't add until we hit half the pandemic drop. And in a recession, LULU is pretty expensive, right? So I don't know how many people are going to be buying Lululemon stuff. Tradable bounce, yes, should hit a lot of resistance at 310. Mongo fell apart. I am long Mongo somehow. Credit put spread, I believe, and it's at or in the money at 155 for May. So I will have to do some triage. No one asked for McDonald's. No, that's good. I am short McDonald's, as you know. For this one is I would be looking to move this position out of trouble. How? I haven't decided. I will use bounces to make it smaller or exit for loss. Or I will take shares at 155 and break even or make some money if they assign me the shares. We're approaching a tradable a tradable target. Oh, look, it does match that. So 136 into 136, there should be a buyer and lower. So what I can do is I can close this and move it down to here somehow out in time. So kick the can down the road and see where the market wants to stabilize to where it's a no-brainer ownership of shares. Mongo has decent sales, not an outstanding story. It's great. So we'll see how well the investors in it, how much conviction the investors in it have. If I took one credit put spread, I would just book it and walk away from it. Medtronic, very wild stock. Support resistance. So these are old boxes, but I think they're still in play. I'm going to delete them anyway. Look, I'm always amazed when the business is this stable. I mean, there's nothing outrageous with the business, flat top. And then you look at the stock and it trades like Tesla, whipsaw. This would get me out of trading that stock forever. You do have support at 80. Give or take, and backup support at 77, give or take, and backup support anything below 75 should be bulletproof from that perspective. Targets 1 and 2 have been met on this red W, the bearish targets. Target 3 is probably 78. So if it gets to 78, it makes a bargain. However you trade that stock, buy shares, sell puts to own shares, sell a put spread, buy a call spread, all kinds of stuff you can do with it. MELI, pretty big stock. People asked me on the drop, we saw that it was vulnerable and it played out the vulnerability pretty quickly. Every time we say vulnerable, it comes back down. This was an overshoot. I told people don't chase it. Even though the P&L is fantastic, the growth rates and everything on paper is just perfect. Ignore that. When something is that good and I'm trading it, then it becomes not a question mark. So I just focus on the charts. It's like trading Apple. I don't need to check the fundamentals of Apple or Google. I know they're good, so I'm just focused on the chart. On the chart, they should have held 1960. So now 1960 area or higher should be the problem. Conversely, anything under 1800 should be bulletproof, that dotted blue line. So if I'm long, I'm not exiting. I wouldn't sell naked puts in that one. I would be encouraged to sell a put spread. To be honest, I haven't sold anything in it, so I don't know how liquid those things are. As far as shares, I wouldn't pile in. Strong support below and what should be strong resistance above. Good company. It'll follow the market in general. Meta, good company, questionable. Good P&L, hell yeah. I think they're a scam, but this played out. Okay, I said they'll fall, bounce, and then fall down to here. Look what they did. They fell, they bounced. You see it right there? And then they fell down to here, exactly at my target. So now what? Let's take out all of the drawings. This is a well-consolidated zone in one sense and not in another. So let me explain. you have a buyer from here down to 415, like a solid buyer, but that's $100 almost of downside. So the question is, where will the sellers surface on the rebound? I think 560 or higher would be a seller. So I use Meta as a gauge for risk appetite. If they're buying the hell out of the stock, we have a risky market. So the VIX is lying at 45. Okay. By the way, remind me that there is a trade on the VIX, an almost no-brainer trade on the VIX to short it responsibly. Ask me about it in the live tomorrow if I forget to mention it. So rallies into 580 are exits for me. It can get there pretty quickly. Use it to exit your problems. And if I'm long, I'm not exiting. If I wanted to nibble long, this is a pretty good entry point. Not all in, halfway. Philip Morris had a weird moment. Also, like all the staples, Coca-Cola, Pepsi, and all of that, they're rallying as the markets are crashing. Not for me. For the life of me, people say, oh, we got to ban fatty foods and sugars. Why the hell are we not banning cigarettes? So I'm not in favor of banning anything. It's a free, let people decide what they want to do with themselves. But why did this one get a pass? Everything they produce is a killer. Why does it get a pass? This is not an entry point. All of this was an overshoot on the upside. If it falls to 44, I would not be surprised. If you buy it for a dividend, may I introduce to you government bonds? They paid probably just as much. I don't know how much dividend this one pays, but it can't be much more than the 4% or 4.5% you can get from lending the government money, which is the risk-free investment. This is not risk-free. Ask anybody who bought it up here for the dividend. How well did that play out? Not very well. As far as good support zone, below 53. Very good. It's good price action. Merck. Okay, so this is an enter long with a stop. Unfortunately, the stop is at 68. So what am I saying? It has support here, but it extends through 68. So somewhere between here and 68, there's a buyer. So to go long, I would sell a put spread to leave room for that. That's one way. Buy a call spread so I don't lose a lot of money right away. Buy a few shares and sell some covered calls. All these will put me into the stock moderately. Okay, these are fast-moving stocks. Rallies into 96 should find a lot of sellers. Above 100, I don't think you can get there easily. Microsoft, I've heard of it. I have heard of it. I'm long Microsoft. How? I can't remember. Hold on. Credit put spread at 315, 315. So yes, very conservatively long Microsoft. Great company, great P&L. I don't like the level it's at visually. You can see that not too long ago it was down in the 200s and now it was up in almost 500s. And I told a lot of friends that it can be in the low 300s and it's almost there. So there's a cluster of support all the way down to 310 with confidence. And they don't make better businesses than this, to be honest. It is vulnerable if the market's corrects for 6 months that it can be in the high 2s, 280, 270 would make it an extremely solid technical trade. So me being long at 315 is not that risky so far, although I do acknowledge the risk. Rallies will be met by sellers at 380, 395, and 408. Hopefully you wrote down those levels. It has the propensity to bounce, but the question is, will we start where we will sell the rally? MSTR is still in danger, but it's still the good news for the stock market. This stock depends almost solely on the price of Bitcoin, which is not on fire yet, not on sale yet. So this stock can be at 190 or 400 in the next 3 months. You be the judge. If you go to the options chain and you go to sell puts or buy calls or buy puts, the money they charge for these things tells you that even the pros don't know what it's going to do, so they charge you an exorbitant amount of money because they have no idea where it's going. So if they have no idea where it's going, please knock your conviction level down to, this is an iffy thing, so you don't lose a fortune. So if somebody puts in a fortune in there, they're either super rich or dirt poor. That is not the way to invest. That is literally how you gamble in Vegas. So make moderate moves on this one. Super support at 229. You lose that, you go to 160. Sellers above 340. Micron went long one day too soon, right? So I went long moderately. I'm trying to remember how. Okay, I said I'll buy the shares at 45. The day before it fell 12%, but it had just fallen like 7 or 10%. So you can't time it right. I know there's a buyer into 60 and support from here on down to 48. So if I put the stock at 45, it wouldn't be such a bad thing. This is a leader in its segment. And if I wake up one day owning shares at 45 and I sell it for 43, I would have lost $200, as opposed to me having to close my put for a big loss that I sold. So I am longish, but not from here. And it does have support. Levels that I think will matter: 58, 58. Another level is 51, 51. And if you lose the last bounce, which is 48, you might accelerate lower. And bounces, if you're long with calls or bought shares, or if you're terrified of the put you sold too many, and you get a bounce to 84, exit as many longs as you can. I can hedge my bet by buying a few puts temporarily, middle of the way, down in the 45 area, kind of like to cover the holy crap moment if the markets, fall another 20% in the next couple of weeks. That would stop the bleeding tremendously. NASDAQ, that is NASDAQ, the company, not the stock, the ETFs. So that's the company, NASDAQ. No real support until 64 or 62, 61. And rallies into 76, I would exit those. 72, actually. Okay, net, Cloudflare. All right, we're selling rallies. That's what we're doing. Rally sold, rally sold, rally sold. The next rally will be in danger of being sold. If I'm long net via a sold put spread or something like that, I shouldn't panic. I should be concerned that we lost 113. And, 80 or 72 might be the target on this. Let's zoom out to a higher time frame. Wow, that's a pretty wild stock. Again, somebody asked me, would you want to own shares? I was like, on paper, I do, but I do not want to be involved with investors that are this inconsistent with their investment. If somebody loves it at 230, and then somebody hates it at 40, and then somebody loves it at 180, and all this within a couple of years, that's an unsophisticated investor. So be careful where you put your money. Technically speaking, anything below 90 should be bulletproof, but unfortunately, it's like $20 wide. So if I'm long, I'm not adding. If I'm looking to go long, I'm starting, and I'm leaving room to double my position much lower. Nike is pretty much the opposite. Nike has sold off into the pandemic levels. That's why it had a green moment on Friday when markets were falling 6.2%. 6%. After a 6% day. 12%. I don't think I've ever seen 12% in 2 days. I mean, I've seen giant drops, like crashes, but two moderately, like starting days, 6 and 6. That's pretty impressive. Anyway, back to here. This one has no weak hands left in here. Okay. Everybody's convinced that it's losing market share to on. Okay, so why isn't on through the roof, right? So it's a solid company. It's a buy to dip, an investment for the long term. Half the investment here and the other half later if we crash. If not, then you're in it. ServiceNow, almost the same comments as the other one, except here they're a little bit too consistent. So I'm not adding. Okay, if I'm long, I'm not adding. If I wanted to get long, I would do a credit put spread and nothing but. There is no need to buy anything here. Great P&L. Great P&L. So it is a buy to dip stock on dips, but I'm not adding. This is the kind of stock that can travel miles and miles before they figure out, oh, it's a bargain now. Like technically speaking, 612, 615, okay, that grabs my attention. At least it brings me back to these three peaks, and we'll consolidate that. But I think that it is vulnerable to sell the rally mode. So let's give you some short-term levels. 780 would be exit for me. If I'm lucky enough for them to go to 760 to 780 and I'm long, I'm out as a trader. As an investor, nope, nothing to do. Nucor, who's N-U-E? Yeah, Nucor. I can't remember. Steel. I wouldn't touch that. Anything that's a commodity, those are directly hit by tariffs. You know me, I say tariffs don't matter that much for how many iPhones we sell, basically. But if the company's business relies on one thing and that one thing has been hit with tariff, boom, you're hit. Like gas, steel, aluminum, any company with one commodity. So be careful. It's a headline stock. This P&L is crap compared to this price action. So this price action is based on something that is not in the P&L, which means that it's hopium. I wouldn't touch that thing for all the money in the world. I can't tell you that it's not at 60 or 140. So why? Technically speaking, you do have buyers at 100, 93, 94, and 88. If you lose 88, then 70 is fair game. I can't tell you about that. So it's too old. 112, 116, and 122 are exit zones on rallies. 112, actually 109, 112. With that, second video is done.